There's likely a little known mortgage program sitting right under your nose, and it's the 100% down conventional loan. And this is offered at a lot of credit unions and smaller regional banks. So it's probably one right in your community that would lend you money to buy a home with no down payment and also no mortgage insurance. So you'll be able to save. Now, this is really popular with Navy Federal, Synovus. I'll try to put any banks that I'm aware of, but it's also popular at some of your local credit unions. I'm Shaheedah Hill, getting you over the hill to home ownership and helping you confidently buy your first home. So a lot of people are not aware that, number one, conventional loans are not just 20% down. The 20% down helps you avoid mortgage insurance. However, there's another loan that's 100% financing loan, no down payment, that also helps you avoid mortgage insurance. Now, there are the main, and I'll just start with it up front. One of the things you're going to find with some of these conventional loans is that the interest rate might be a little bit higher, but I'll help you find a way around that as well. So if you're thinking, hey, I don't have a lot of money for a down payment, I have some money, but I would rather keep it as part of my emergency fund or use in other areas, this 100% loan product may work for you. So again, it's 100% financing. There's no PMI. There could be a little bit more of closing costs with this loan. However, the way that a lot of people are using this loan, particularly people that might, use down payment assistance programs instead of using, this product, maybe you don't have a lot of down payment assistance programs where you live. You can, if you do this right, and I'll give you an example of a client that I worked with that used this loan in the last 6 months. She did the one with Navy Federal. You can do this where there'll be very little money out of pocket if you do it right. So you're going to be asking for, and this is better with resales and new construction because new construction already typically has their preferred lenders. So you're not able to do sometimes 100% financing unless their preferred lender has this type of program. So this will work usually better with resale homes. So with resale homes, a lot of sellers are sitting on a lot of equity because their homes went up in value so quickly, in the last 3 to 4 years. A lot of times you're finding that they can pay your closing costs. And in this instance, the house, I believe, was about $400,000 or so. The closing costs were about $10,000. So in our initial consultation, she said, hey, I'm looking for a seller that's willing to pay all my closing costs. We had our loan estimate. We knew what the closing costs were going to be. So in every offer that we made, we asked the seller to pay all of the closing costs. And sometimes we were actually going below list price in addition to wanting them to pay some of the closing costs. So it wasn't that, everybody was accepting the offer, but when she finally found a home, and it might have been on the market about 30 days, it was perfect. It had a backyard. It had all of the things that she was looking for. It was in a cul-de-sac. It was had a backyard, 2-car garage, 5 bedrooms, loft, everything. And we put our offer in. We actually put our offer in with 2 homes on the same exact street. One said no to our offer because they wanted us to come up and they didn't want to pay that much in closing costs. And the other one, with a little bit of negotiation, pay at first they didn't pay all of them. I think they went to like $7,000, but by the end of our negotiation we were able to get 100% of her closing costs paid. So she had literally no money out of pocket with the exception of her upfront costs. If you're not familiar with that, I have a video that'll explain those upfront costs, but earnest money, her appraisal fee, and her home inspection. But even because all of those, the appraisal and the earnest money, you get that back if they pay your closing costs. So And with Navy Federal specifically, and I wasn't aware of this, but Navy Federal even refunded her home inspection fee. So when I say there was no money out of pocket, there was no money out of pocket. We actually had money left over, and we did a home warranty on top of that. And I think she used some of it to buy down her rate a little bit. So if you can make this happen, you have to go into it having this discussion with your agent saying, hey, I'm looking for a house, and I also need the seller to pay, the closing costs. So you're putting those offers in. And again, it might not, we probably worked together for at least 6 months. We probably took about a 2-month break in between. But, she was able to get it done. No down payments, no closing costs. But there were closing costs, but the seller paid them. So she was able to keep, a lot of her money on hand to do things that she wanted to do in the home, to keep a large emergency fund for herself. She did need 3 months of reserves with Navy Federal Credit Union. So, and that means like 3 months of the mortgage payment saved. So they don't, want you coming in, you have no money. And so you may find that a lot of the other credit unions that offer this mortgage product, they'll want to see 3 months of the mortgage payment saved. So if you are, for example, say the mortgage is $2,000, they want to see $6,000 saved. Now that money could also, in most cases, be part of a retirement account, your 401k, as long as they can see that you would have access to money if you had trouble paying your mortgage. So I hope this was helpful. I want you to look, because again, this might be right under your nose in your local community, your local credit union, those regional banks, where it's 100% financing. Work with your agent to get, put in offers in which the seller may be willing to pay all of your closing costs, or maybe even the majority of your closing costs. And again, everybody may not be willing to do it, but if that's your strategy going in, you can find a home with very little money out of your own pocket. If you have any questions, please put it in the comments. Of course, I have my first time home buyers masterclass. You shouldn't buy a home without it. That's in the description of this video. Thank you so much. Please like and subscribe if you haven't already.